So let's look at a comparative due diligence. So I've compiled this. Basically, it's my assessment, it's my opinion of some of the most prominent developments in the northern suburbs and surrounds. And yeah, this is objective. Many of these points are objective. But the nice thing about a study like this is you can draw up your own spreadsheet and put your own figures in, put your own numbers in, and that's really getting down to doing your own due diligence, which is in any way what we recommend people to really get comfortable with. The interesting thing for me is just many people ask 1 or 2 or 3 questions before they commit to a development, and yeah, I've just put together, I think this is about 40 or 50 pointers, and that's just something that's worth considering. And what becomes apparent with exercises like these when you remove emotion is that some developments or opportunities might appear fantastic on face value, but if you really do a comprehensive study, then some red lights unfortunately start flickering, and that's really what this is about. So remove emotion and dive into in-depth due diligence, and then pull the trigger once you're happy. So I'm not going to go into each and every development and every pointer here. That will take forever. But anyone that is interested in finding out more information on how I got to these figures, and just general more information maybe about purchasing, I have to declare at this point we have an interest in 3 of these developments, and I try to be as unbiased as possible, and be objective in my views, but yeah, my doors are always open to anyone that would like to come and speak to us about any of these figures that I've used, or based on my research that I've put in here. So, but yeah, it just highlights the importance of asking quite a few. So let's go to some interesting pointers here that I can just think of. Your shortfall, I mean, that's really important if you're planning, if you have limited cash flow, or even if you just want to do proper, property investment planning, you need to know what you're in for. So getting, to your shortfall, I've used simple figures here. It's a 10% deposit on each of these opportunities, to be fair across the board. The nice thing is there's some opportunities here that requires no deposit, and on 100% finance, your returns and those kind of things will obviously look better. I just thought to try and be as fair as possible, I'd like to put that in a 10% deposit, and I've worked on 20 years bond term at 10.25% interest rate. And what else is there that I can tell you? So let's look at a couple of these pointers. Anticipated break-even point. So this is your first year of positive cash flow. That's interesting. Based on, remember, 10% deposit. Anticipated total investment up to break-even point. This includes your transfer fees, if applicable, and your 10% deposit. So this is the sum of your shortfalls up unto the break-even point above. So this is how much money you will need, in my view, if our sums are correct and our assumptions are correct, up until the point of break even for each of these developments. Now remember, this is pre-tax, so there's still tax credits that apply, which wasn't brought into the equation here. And then also another interesting thing is, what is my anticipated equity on break-even point, which includes my 10% deposit. So with each opportunity, it gives you the potential equity, the difference between your current market value at that given point and your outstanding bond. So these are interesting figures to use within your comparison. So it took quite some time to put that together. And then the main indicators, to sum it up, if I can say the most important indicator, although it's not everything, it is very, very important, is internal rate of return. So I've put internal rate of return after year 1, year 5, and year 10. So here you can see how the developments perform over that given terms in terms of internal rate of return. All right, that's pretty much it that I'm going to cover at this point about the comparative investment due diligence study. Thank you.